Is it too late to buy gold? Probably. Is it a great time to buy Bitcoin? Probably. Should you buy Bitcoin instead of gold? Probably. Look, gold's been an absolute tear, smashing all-time highs almost weekly. It's tempting to wonder, guys, the water looks great. Should I jump in now that it's reaching all these historically overbought levels? Or am I walking straight into the euphoric trap? I'm exit liquidity with the RSI screaming overbought, maybe waiting for a significant dip before buying could be the smarter move. Personally, I would like to rebuy some gold at like $2,500 at some point in the future. Perhaps there's even a better alternative out there, and of course that's going to be Bitcoin. Now let's dive in and figure out whether or not now is a good time to actually FOMO into gold, or if we're really just better off buying Bitcoin. Hint, it's Bitcoin, but we're going to talk about the gold situation anyway. Look, gold has just recently made an all-time high of around $3,500, which is about a 15% increase from a month ago, which like gold doesn't do that, okay? You have to understand that's insane for gold. And I know it's nothing when compared to crypto. For gold, it's just bonkers crazy zone kind of move, okay? It's trillions of dollars of market cap added. But what is driving this mega pump? Well, we have to remember that gold is seen as a hedge against uncertainty. Case in point, gold jumped at the start of the war in Ukraine. Gold rose above $2,000 during the corona beer pandemic. Right now, tariff wars, massive political geopolitical uncertainty around a whole bunch of stuff. Gold has again pumped to new heights. The question is if there is a lot more upside left to gold. Now, without a crystal ball, obviously it's tough to say, but charts and indicators can offer some kind of clues. For instance, gold has an inverse correlation with the DXY. This chart illustrates the relationship between gold and the US dollar index. So gold is the gold line naturally, while the DXY is the blue line. Now, if you look closely, you are going to notice that gold tends to rise when the DXY falls. Why? This is because gold is often dollar denominated on world markets, which means that a stronger US dollar makes gold more expensive for buyers using other currencies, thus reducing demand and putting downward pressure on its price. Now, DXY, by the way, is probably going to keep falling, so maybe that's a good thing for gold, and the price can continue to rise based on that. But on the other hand, a weaker dollar tends to make gold more affordable globally, increasing demand and driving its price higher. Now, the correlation's not a 100% negative. During the 2020 pandemic, both gold and the DXY rose briefly due to surging safe haven demand. At the time of recording, the DXY has been going down since January, shedding about 9% from its March highs. However, it might have caught a bit of a break, mainly because of some of the de-escalation in the trade wars. Depends on what Donald Trump tweets, of course. But this is probably why gold hit a snag after making a new record at $3,500 an ounce. So whether gold will rally in the next few weeks largely depends on if Trump wakes up and decides to mess around with China some more, ratchet tensions back up for the global trade war. It also follows that U.S. interest rates are inversely correlated with the price of gold. This is because of opportunity cost. When rates are low, it makes holding gold, which pays no dividends, no interest, much more attractive for investors. Keep this in mind whenever you wait for the Fed to announce any kind of rate adjustments. Now, the law of supply and demand also applies to gold. Obviously, until we can start mining planets that are made completely out of gold or whatever, there's going to be a pretty finite supply here on our little blue and green floating marble here, right? More demand on a finite asset like gold means higher prices. So who's buying gold anyway? Well, the jewelry sector is still the biggest buyer at 29%. Believe it or not, that's crazy. Central banks and other institutions account for around 15% of the demand. Central banks from countries like China, Poland, India have increased their gold purchases since 2020. Interesting fact, Indian women are apparently one of the biggest as a group holders of gold in the world. Yeah, interesting. Now, all this is because of a few reasons like hedging against uncertainties. In the case of China and other BRICS Plus members, is also about reducing dependency on the US dollar, potentially launching a BRICS currency at some point in the future backed by gold, silver, oil, and other commodities. Many countries realize that the greenback, the US dollar, is not just a currency anymore. In fact, it hasn't been a currency for a while. It's also a weapon that can be used against them. But that's a story for another day, okay? Now, before we get into the next part of this story, guys, are you sick of begging for permission just to trade your own cryptocurrencies? Well, Femex says screw that. No KYC, no VPN, no gatekeepers, just pure raw access anywhere, anytime. So it doesn't matter where you are in the world, you can use Femex. You get $10 for starting your account using that link exclusively down below, $500 in deposit bonuses, $1,200 in trading bonuses all ready to claim for you by using that link. It's at Femex, is an OG cryptocurrency exchange, been in the game for ages, deep liquidity, major coins, no weekend bullshit here, okay? But here's the catch. This exclusive offer to get all the sweet bonuses is not going to last. So if you're tired of getting boxed in by weak exchanges, it's time to break free. Hit the link down below now, grab your bonuses, and trade like you actually own your future. Go check it out. So Warren Big Balls Buffett. This dude, my God, what a trading legend. He once advised, be fearful when others are greedy and greedy when others are fearful. Classic line, right? One of the best ways to assess market sentiment is by analyzing investor behavior. Gold buyers have displayed persistent greed for some time now. Peter Schiff is euphoric. That's all you need to know. In fact, if you examine the charts, the weekly relative strength index, or RSI, has been in overbought territory since January. Gold's been on an epic run, and I love to see it. Gold briefly dipped below 70 on the RSI in the last week of February before resuming its extended stay above this threshold. The question is, when will this trend reverse? Because at some point it will. Well, timing remains uncertain. One truth holds: nothing stays elevated forever. No asset remains in euphoria forever. One thing I've learned from years of getting my ass kicked in crypto, okay? Sucks buying the tops, all right? Now, wait, Lark. We all know that gold can tap out at any time, go down. But historically, it's been going up if you hold it long enough. And there is this rumor of a gold reevaluation going on in the US, the Fort Knox gold, and all this stuff, yada, yada, yada. Everything's mega bullish. Yeah, I get that. I understand that side of the story. And gold has been a store of wealth long before modern fiat was created. And I like gold, just to be super clear. I like gold. I think gold's cool. But I don't see gold losing to paper money anytime soon necessarily, okay? It will continue to outperform over time, though. Now, Kitco interviewed Tavi Costa, partner and macro strategist at Crescat Capital, to get his opinion on gold. TLDR, there's potential for gold prices to reach extraordinary levels in the USA if they were to revalue their gold inventory relative to its outstanding treasuries. Currently, the value of U.S. gold reserves is about 2% of those of treasuries outstanding, compared to roughly 17% in the 1970s and close to 40% in the 1940s. Now, taking it back to that 17% would actually peg gold's price around $25,000 an ounce, 40% to $55,000 an ounce, which is crazy, 7 to 15x for the current price. What the fuck? That'd be nuts if that happens. Anyway, that would be effing awesome for gold holders, and Peter Schiff's euphoria has barely begun. But the question is, in this scenario, is it actually all going to happen? And looking at the monthly charts, if you draw the fib from the August 2020 swing high to September 2022 low, you'll see that we're almost at the 4.236 level, which comes in at $3,590. And these kind of wild price predictions are the exact kind of shit that comes out in your tops. On a yearly time frame, if you draw the fib from the last swing high to the last swing low, we already have hit the 2.618 levels, so that's the resistance to break, plus the 4.236 fib peak here would be at $4,800. So it's still a decent return and gives the gold a long way to run if that plays out. But that's on a yearly time frame, so you might have to wait some while for that price action to get hit. Now, I cannot obviously, give you financial advice where you should buy or sell your gold, but I'm not a buyer here, let's put it that way. We have different risk tolerances and different time frame projections. However, I look at it this way. I'm not a major gold bug. I do like gold, okay? It's nice to have in case we go into Mad Max scenario, right? But holding gargantuan sums of gold is cumbersome for a variety of reasons. Heavy, hard to transport, hard to verify, security, blah, 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 blah. Buying and selling is actually a pain in the ass. When you're holding the physical stuff, you have to pay premiums. It's a lot of crap goes along with it, okay? Why not buy some paper gold? Oh, that's not a good idea. Paper gold is often backed by fractional reserves, similar to a bank's fractional reserves. Yeah, I'm going to take the real stuff. Thank you very much. So if everybody tries to withdraw their paper gold at the same time, then crap's probably going to hit the fan on gold markets, and that probably reprices violently as well. But that all brings us to the better option, why we have to talk about Bitcoin. Bitcoin has a finite supply. It's easy to transport. It's easy to trade. It's easy to just send all around the world. It's deflationary, provable supply. No one's going to come out and say, hey, we found 1 trillion ounces of gold. No government can control it. All transactions are recorded. Everything's verifiable. So you can just check if you have the real stuff or not. In terms of returns, just look at this. This chart is not about a meme coin that got rug pulled. It's gold versus Bitcoin. In 2010, you needed a boatload of Bitcoin to buy an ounce of gold. Now you only need 0.04 Bitcoin. With better regulatory clarity and institutional acceptance, Bitcoin is shaping up to be a better version of gold. Personally, I'd rather go with the changing times than get stuck in the past, although again, I do like gold. And if I see Bitcoin rise to 100 ounces of gold per Bitcoin, I'm going to sell some Bitcoin, man, and buy some gold, because that's probably a fantastic opportunity right there, okay? But think of it this way, too. If gold really does go to, think about this. For it to double, to get 100% move and go to $7,000 is an absolutely epically gargantuan move, and where's the money in the world to make that happen? For Bitcoin to go from 90 to 180K seems a lot more plausible, doesn't it? So just have to ask yourself the question, which do you think is actually going to make you more money over the next 5 to 10 years? The answer is obviously Bitcoin. Thanks for watching.